you're probably losing money without even realizing it. And no, it's not because of inflation, taxes, or a bad stock pick. It's because someone might be scamming you and doing it so well, you'd swear it was legit. Every year, investors lose billions to schemes that look professional, well-designed, and even regulated. Ponzi schemes, fake crypto projects, real estate funds that don't even own property. And here's the most dangerous part. Most of these scams don't come from some shady guy in a dark alley. They come from people who look like experts. People who sound like wealth managers, use financial jargon, and even show up on podcasts and social media. At the end of this video, you'll know exactly how to protect your money. I'll show you how scammers manipulate your emotions, what red flags you should never ignore, and how to instantly spot a fake investment opportunity before it ruins your life savings. And to make it real, I'll break down a massive scam from last year that stole over $100 million from everyday investors, so you can see exactly how these traps are built. Let's start with the most important truth. If it sounds too good to be true, it probably is. But here's the thing. That advice, it's no longer enough. Scammers have evolved. Gone are the days of bad spelling, anonymous emails, and suspicious websites. Now, they use polished presentations, legitimate-looking apps, and even fake media coverage. They'll show up in Google search ads, have 100K followers on social media, and claim guaranteed returns with almost no risk. They know how to build trust fast, and that's exactly how they get you. Take Mark, for example, a 43-year-old dentist from California. He made good money and wanted to invest it smartly. He came across an ad on Instagram promising 20% monthly returns through crypto arbitrage. It looked professional. There was a team, real faces, real offices. They even showed videos of client testimonials, screenshots of gains, and claimed they were audited. They added him to a private WhatsApp group where people were constantly sharing results. Just made $2,000 today. Withdrew my profits instantly. In less than 3 months, Mark had transferred $75,000. And then, one day, the dashboard stopped working. No withdrawals, no answers, just silence. Turns out the dashboard was a simulation. The clients in the WhatsApp group were actors. The profits? All fake. The company? Registered in a country with no regulation. What made Mark fall for it? It wasn't greed, it was FOMO. It was the fear of missing out on an opportunity that looked exclusive, sophisticated, and urgent. And that's exactly how these scams work. They create the illusion of trust and momentum. They manipulate your psychology, urgency, scarcity, groupthink. And once they have your confidence, they take your money. So how can you spot the traps early before it's too late? Let's start breaking down the tactics they use and how you can stay one step ahead. Scammers don't sell investments. They sell certainty. They sell you the dream of easy wealth without sleepless nights, without risk, without effort. And the moment you want to believe them, you're already vulnerable. See, most scams don't start with an offer. They start with a relationship. A friendly message. Helpful comment on your social media post. An email that says, "Hey, I saw you're into investing. I think this might interest you." They ease into your trust. They take their time. And once you're comfortable, they flip the switch. Let's break down the playbook scammers use to make even smart people fall for obvious traps. One of the first tools they rely on is social proof. They build credibility by showing you what looks like a crowd of happy investors. Fake Trustpilot reviews. Slick testimonial videos. Telegram chats filled with success stories. You'll see messages like, "Just received another payout. This platform is amazing. Earned $3,200 last week while traveling. Passive income is real. Only 5 spots left before the next ROI cycle starts. It feels like everyone else is already making money, and you're late. So what do? You jump in. Because missing out feels worse than losing. But here's the truth. Most of those screenshots are photoshopped. Those chat participants, bots, or hired actors. And those payouts? Faked with custom dashboards that mimic legit platforms. Then comes the authority illusion. Scammers know how to look trustworthy. They name-drop well-known investors, show fake interviews with celebrities, and even run ads with photos of Warren Buffett or Elon Musk saying things they never actually said. In one case, a deepfake video of Elon Musk endorsing a crypto platform led thousands to send in money, only to lose everything. Think about that for a second. They didn't just fake a website. They faked a person. And if you're thinking, I would have spotted that, remember, you only need to be tricked once. They also weaponize complexity. Their websites are filled with technical language, trading dashboards, smart contracts, and white papers. But when you look closer, there's no real team. No regulatory license. No third-party audit. You'll ask, where's the company based? And they'll say something vague like, we operate globally through a decentralized structure. Translation? They don't want to tell you who's behind it. Scammers also love to use urgency, because the less time you have to think, the more likely you'll act emotionally. They'll say, this opportunity closes in 48 hours. Only people invited this week will be allowed in. Whales are moving in. You don't want to be left behind. And the moment you ask for time to research, they'll pressure you with guilt. They'll say things like, I thought you were serious about building wealth. Or worse, you're going to regret missing this. It's not just manipulation. It's a script. And it works because it makes you doubt your instincts. Let me give you one more real-world example. In 2022, a company called Hyperverse claimed to offer life-changing returns by investing in the Metaverse. The project had professional branding, live events, even celebrities on stage. They promised that by buying their token and holding, you'd get daily rewards. Thousands of people got in. Some even borrowed money to invest more. And then it collapsed. Over $1 billion gone. No refunds, no accountability, no real business behind it. And here's the kicker. Many of the victims still believed in the project even after it vanished. Because scammers don't just steal money, they steal faith. That's why it's not enough to be cautious. You need to be informed. Because these scams are getting smarter, more sophisticated, and harder to spot. But here's the good news. Once you understand the tactics, you can reverse the game. You can be the one asking the right questions. You can spot the red flags instantly. And most importantly, you can protect your future. In the final part of this video, I'll share a practical checklist that I personally use to evaluate any investment, and tools that can flag suspicious offers in seconds. Because knowledge isn't just power anymore, it's protection. Now that you know how these scams operate, how they lure you in, manipulate your trust, and vanish with your money, it's time to turn the tables. Because knowledge is only useful when it becomes action. So let me give you the exact checklist I personally follow before investing a single dollar. Not just to grow my money, but to protect it. Because in this game, defense is just as important as offense. Step 1. Verify the people behind it. Is there a real team with real names? Do they have a history in finance, tech, or entrepreneurship you can verify? Check their LinkedIn. Cross-reference their names. Google them with the word scam next to it. If they're ghosts online, or if everything seems too polished to be true, assume it's a shell game. Step 2. Regulatory footprint. Legitimate investments are usually registered, especially if they're dealing with public money. If you're in the US, check the SEC's Edgar database. In Europe, look at the ESMA or your country's financial authority. Don't fall for badges or seals on a website. Those can be faked in seconds. Always check on the regulator's actual website. Step 3. Ask about custody. Where is your money being held? If they say, it's in our smart contract or on our platform, ask who audits it, who controls it. In real investments, your money should be separate from the operator. If they run the website and hold the funds, you're not investing. You're just handing over cash and hoping for the best. Step 4. Look for third-party audits and real data. Scammers love PDFs with big logos and fake graphs, but they hate transparency. Ask for a third-party audit. If they say they were audited by a firm, look up that firm. Is it real? Are they licensed? Have they done audits before? Also, check whether the company has actual revenue. If they're promising you 15% returns monthly, ask, how are they making money? If the answer is vague or from trading, dig deeper. Step 5. Understand your exit. What happens if you want your money back next week? Can you liquidate your position? Are there withdrawal limits, penalties, or lock-in periods? Scams often delay withdrawals until they disappear. Real investments give you clear, contractual ways to exit. Now, let's talk about practical tools that anyone can use. One of the most underrated resources is scamadvisor.com. Just paste the website URL and get an instant trust rating based on domain age, registration info, and country risk. Next up, FINRA's Scam Meter. Answer a few simple questions, and it'll tell you if the offer fits a known scam profile. Google Reverse Image Search is another powerful tool. Take a profile photo from their website or LinkedIn, drop it into Google Images, and see if it appears elsewhere. If it shows up on a stock photo site or on 5 different CEO profiles, you've got your answer. Also use Wayback Machine to see if the company website existed last year or was built last month. And finally, check their business address on Google Maps. You'd be surprised how many fake funds operate out of a P.O. box or a parking lot. Now listen carefully. Avoiding scams doesn't mean avoiding opportunities. It means learning how to evaluate risk intelligently. You don't need to be a lawyer or a financial analyst. But you do need to slow down. To ask questions. To not be afraid of saying, I'll think about it. Because real opportunities won't disappear if you wait 24 hours. Scams need you to move fast. Because time is their enemy. So here's your playbook. Ask hard questions. Verify everything. And if anything feels off, walk away. It's better to miss a good deal than fall into a trap that destroys your savings. Let me leave you with one last thought. We spend years building wealth. Saving, sacrificing, working late, taking risks. Don't let one bad decision erase all of that. So now that you know how to protect yourself, use it. Share this knowledge with someone. Because someone you know will be targeted by a scam this year. And your warning could be the thing that saves them. If this video helped you, hit that like button. It tells YouTube to show it to more people. Subscribe if you want to keep learning how to build and protect your wealth. And drop a comment if you've seen any suspicious offers lately. Let's expose them together. Because the sooner you learn to protect your money, the faster you'll grow it.